Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here as we are set for another episode of the show. Appreciate you being part of the Market Talk family. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. Find our social media links there. Also, our YouTube channel, all of our streaming sources, our radio affiliates, everything, markettalkag.com. Always enjoy getting to catch up with today's guest. He has a really interesting take on the markets and more. And happy to have back on David Widmar with Agricultural Economic Insights, AEI, joining us here today. David, it's great to have you back on Market Talk. How are you?
Always great to join you, Jesse. Looking forward to today's conversation.
Definitely, and we have no shortage of topics to focus on here today, David. I think one of the first areas we should probably start with, of course, is that May WASDE report out earlier this week. And obviously, looking at some of those numbers, some of the numbers came in pretty much in line with what we thought, and there was a few surprises out there. Overall, what was your reaction to that WASDE report? If you had a kind of a short summary, just overall your reaction to it.
Yeah, so for context, this May WASDE is the first look at the corn and soybean balance sheet for that 2021/22 marketing year. It's always highly anticipated. On the production side, of course, they have to use trend numbers, and there's a lot of dialing in that's going to happen from here. Um, I we expected a tight situation for stocks. Stocks are maybe going to grow a little bit. I was looking at the usage. I think that's one area that we can really learn a lot. When we look at the usage, we like to step back and look at the usage on a trend line, similar to what we might do for yields. And so corn was down, but both crops were down from last year. But how do they fall out relative to the trend line? Corn was about 3% below the trend line, about 500,000 bushels below trend for usage. When you think about soybeans, they were actually still above the trend line. So still a very positive story. For context, we were about 5% below trend line during the trade war for both of those crops. So usage is cut back a little bit. But again, this is total usage. A lot can happen in this specific categories, but overall, still a positive usage story. Throughout history, soybeans, if we're in a really price rationing mode, might fall 10% below trend or trend usage. Corn in 2012, and the height of corn rationing got 16% below trend. So nowhere near this hyper aggressive price rationing when we're really pulling usage down. So when I looked at it, tight stocks, but we really haven't seen usage taking a huge hit, a little hit, but not a huge hit.
Well, let's break down a little bit more on the corn and wheat side, I would say, because it seemed like the corn and wheat bulls were disappointed yesterday, although they really shouldn't have been. I mean, we saw strong Chinese demand in the coming year, and there are a few different factors that came out in that WASDE report that, to me, didn't seem to indicate that there should have been disappointment among the corn and wheat bulls. What did you see with corn and wheat yesterday? A little deeper dive into that.
Yeah, so I think you see another scenario here, especially on the corn, where stocks are expected to expand a little bit. And I think part of this was this usage scenario we just talked about. Usage came down below that trend line. So I think we saw ending stocks still tight, but less tight, I guess is how you would summarize that. And so maybe these high prices are starting to cure some of the problem of high prices. I think that, the markets are in a sort of a tricky spot. We now have a little bit of information. We know it's tight, but the growing season narrative is really going to catch on here in the next few weeks. And it's all attention is going to focus on where's the crop at and how it's doing. You know, for context, right, Jesse? Last year, we were thinking about 20% ending stocks to use for corn. And what happened? Well, we had a big prevent plant scenario. We had below trend line yields for corn, and we had a demand story come through. And it really dramatically changed the situation. So this is the first take. And a lot's going to happen from here. The USDA isn't necessarily forecasting what it's going to be, what things are going to look like a year from now. They're trying to say, given all the information we have today, this is what the scenario looks like. And I think as we start to move forward into this growing season, I think we're going to see uh, that attention really focus in. So back to your original question about corn and wheat, I think once we start to see the growing season play out, we'll start to get a signal is, are we going to need to ration demand even more? Because that's where it's going to come from. We kind of saw this scenario where we're getting close and tight on stocks. If we're going to see a need, if production gets hit, we're going to have to take it out of usage, not out of ending stocks. And that's sort of the reality we are here in 2021.
On the soybean side, it seemed like the bulls liked the WASDE report this week. It kind of confirmed that the soybean supplies, both domestically and globally, will remain tight over the coming year. Really, there's no room for error here. And I know some folks are starting to turn their attention to that June 30th acreage number for soybeans. Some saying it's got to be north of 90 million acres to see an above trend yield this summer to start rebuilding stocks. Is that the indication that you're getting from what you saw in the WASDE report here for soybeans this week?
Yeah, so I think that's, there's always a balance if we're going to have a production hiccup. How much of that's going to come out of ending stocks? How much of that's going to come out of usage? On soybeans, the ROSI report said it's all going to come out of usage. On corn and wheat, there's a little bit of maybe wiggle room in that ending stock, but not a lot. It's the same thing when we have big crops, right? How much of that's going to get used and how much is that we're going to put on the balance sheet in the form of ending stocks? So that soybean situation is saying 100% or nearly 100% of any production hiccups going to come out of the usage column. You know, so we've been thinking a lot about this acreage question. We have a question within our Ag Forecast Network, which is a tool to help decision makers, farmers, and everyone else in ag think about uncertainty. And we ask, what's the probability of getting more than 181 million combined corn and soybean acres? And the expectations are pretty high in that among the consensus. But what we can do is we can look back and say, how often do we see these big 2.3 million acre swings in combined corn and soybean acres? And my big takeaway is Mother Nature is heavy handed. Mother Nature can either pull back on the prevented planting, or we could have a below normal prevented planting and push this the other way. So I think as we look to the end of the June, we got to keep an eye on prevented planting. Will prevented planting come in below quote unquote normal? If so, that's going to start to give us this idea that we might see more acres coming into the production relative to this May WASI report. But it's really important to think about what are our expectations and how does that line up with what might be historic normal deviation. A 2.3 million acre increase for both commodities, corn and soybeans, is historically a big hill to cross over. It has happened, but we don't see these type of changes on a regular basis.
Well, and you mentioned Mother Nature, and I think that's another thing that our market is going to be shifting its focus back to is kind of that lead pillar, so to speak, fundamentals we're kind of standing on. We know that Western Midwest Core Belt's dry. I mean, we've seen some rains, but most of that Core Belt west of the Mississippi, I think the driest on record the last 30 days since like the 80s, since 1980, I think was what I looked up and saw. So, I mean, what are you hearing from folks you talk to in regards to the risks that are shaping up with the dry weather situation in the Western Corn Belt? Because I think a lot of farmers, a lot of traders and analysts are really starting to kind of look at that, and it's starting to become more of a focus as we get into the planting season and into the growing season.
There's a bit of a paradox in my mind. On the one hand, we look at the drought maps, we look at the data, it gets concerning. But darn, it's really good planting conditions right now. And we're able to get out there, get across the ground timely. We're getting good planting conditions. It's a lot better than we saw the last 2 years, which was wet and cold and slow. And so I think there's a bit of a trade off here of, is it too dry or is it just right? And I think there's a combination. I remember I grew up on my family farms in Kansas, and some of the best corn we ever had was one of the driest Mays on record. And then it started raining. So the way I think about the current weather setup is that um, dry spring conditions are probably a necessary but not sufficient condition for a big major drought, like a 2012 like event. But just because we have those conditions today doesn't necessarily mean we're going to have that drought. We got to watch how that progresses. And if we continue to get timely rains into May or end of May, into June and early July, this crop could be off to a really good start given the weather that we've seen. Again, not saying this universal everywhere, but this idea of a dry spring is favorable right up until it turns into a dry drought in the summer and months. And so we got to find that balance. And the corn crop's looking at that, and the soybean crop as well. But I think all eyes are on the corn, especially as you get in the western parts of the corn belt.
Well, on the flip side, South America, we know Brazil. We've heard a lot the last few weeks about the dry challenges down there with the safrita corn crop and continue to be dry. I know a lot of agencies starting to finally lower their number for Brazil. I know USDA came out in the WASD, went down to 102. Some private analysts have been down around 100. What are you hearing from the South American picture and how that's all influencing our markets right now?
Again, it adds to this uncertainty that's out there. It adds to this narrative of conditions are tight. There just isn't a lot of big production stories that are emerging here anywhere on the horizon. Again, very different from a year ago. But, but a strong demand story and tight production stories kind of emerging everywhere, and that's feeding into this whole bit broader picture. Um, it as we start to go through the growing seasons for both hemispheres and get both these crops better known, we'll start to understand the full complexities. I'm always reminded that the market pays a premium when there's the most uncertainty, and so the question is when are we going to have a lot of uncertainty about where all this plays out? And the growing season starts to get us into that zone of uncertainty.
David, I'd like to switch the topic to China. We've heard a lot, of course, this last how many months or whatever about China's demand for corn, soybeans. They've come back to the table to start buying new crop corn here recently. And I know you just published some stuff on the AEI.ag website looking at China's impact on global agriculture. And I just love for you to maybe talk about this a little bit and share some of what you published there. I thought it was very fascinating.
Yeah, so we took a look. It's on the free side of the website on the blog. We took a look at domestic production, domestic consumption, and China's sort of fingerprint on global trade for 12 different commodities: corn, soybeans, wheat, rice, livestock, the meats, and a few other crops such as sorghum or cotton or even walnuts, I believe, made the list. But sort of looking at this demand story, and I think if you think about over a lot of 2005 to 2015, you could make a pretty compelling demand story by just putting up a chart about China. And what we started to see is that demand story is becoming more nuanced. So the classic story here, of course, is soybeans, and I encourage everyone to go look at this article. But you can capture a lot in this trend. So it's China. Was pretty sufficient in their soybean production, somewhere under 20 million metric tons, and their consumption was 20 million metric tons all around 2000. And then they started buying more than they started consuming more than they could produce. Now they consume somewhere north of 110 million metric tons. So usage has increased, consumption has increased by 5x in the last 20 years, but production has stayed pretty much the same. What does that mean for global trade? Well, they're buying about 60% of all the soybeans that are available on the global trade market. But this is the most enthusiastic story of China trade. Let's look at some of these other ones. Corn, for example, is maybe the one that is on our thoughts right now. So you can see we're starting to see this gap between domestic production and domestic consumption, and consumption's outpacing production. And with that, China's turned to the global market, and now they're purchasing somewhere around 13% of all the globally traded corn. We've seen China make some purchases in the past. They've came in and bought in the past, but never to this degree, never to this much. So it's a very interesting story to see play out. And we'll have to watch where this corn story plays out moving forward. If we think about sorghum, you can see the impacts of trade with China and the trade war with sorghum. They came in and were buying 80% of the globally traded sorghum or milo pre-trade war. Then they dropped off. Then they came surging back. That whiplash. And for some of your listeners in the livestock, we've seen an interesting livestock development. Consumers are buying more beef. China has to rely on imports for that. They're a big part of the global trade there. At the same time, they're consuming less poultry. They're consuming less uh, um, pork. This was even before the African swine fever situation. So I think the story here is China demand is still there. It's just becoming a little more nuanced. Consumer preferences are coming to be a bigger issue, especially in the meats.
Well, and again, you mentioned that's on the blog on the free side of the website, aei.ag. And we'll post that link up as well to our website, markettalkag.com. And I know as well with your website, David, you guys have the AEI Premium and the forecast tool and a lot of great stuff for folks to check out. And we'll touch on that here in a minute before we wrap up. I'd love to just get any other final thoughts you have for us, though, today. I know there's a lot of other factors out there. We're obviously watching some supply chain issues in the U.S. right now, whether it be pipeline hacks or the Mississippi River being shut down to barge traffic because of that bridge crack in Memphis, Tennessee. A lot of things out there with the supply side of the picture, a lot of macro factors in the market we're watching, a lot of geopolitical tensions out there. Anything on those fronts that you're seeing that we really need to pay attention to here moving forward?
I'm going to make a blanket statement here, but I think it's still very relevant. There are the economic impacts of, say, the river situation on the Mississippi in Memphis. There are the economic impacts of gasoline prices creeping above $3 a barrel, $3 a gallon. But then there's also the psyche of those impacts. I think sometimes the psychological impact is more significant than the actual economic impact. So when people start thinking gasoline prices are been going high and now they're even going to go higher, when they start thinking about, am I going to be able to access these global markets? I just had my truck in the repair shop, and I was asking the guy about supply of parts, and he said, I can get most stuff, but what's happened is we used to share parts among dealerships, and we're not sharing parts anymore. If we have it in our inventory, we're going to keep it. We're not going to offer it up to another dealership in another state and overnight it to them. And I think that is a huge part of all of this, and even goes to kind of this inflation stuff. When people start expecting prices to be higher a year from now than they are today, that has an impact. And so I think it's important to untangle, gas prices. We wrote an article on the premium side. Gasoline prices had been heading up all of 2020 or most of 2020, and they've been up for several months in 2021. But now with this hack of the pipeline, so much attention on gas prices, and we haven't even seen that impact play out in the data yet. So we got to step back and see how that is. But gas is up. It's been up for the last year because of all the other factors. And now we have these other side effects, these side impacts that sort of heighten our awareness and heighten our attention to it.
Well, David, always enjoy the conversations we have. And again, mentioning AEI Premium on the website, aei.ag. Talk about that a little bit, how producers and folks interested in seeing all the great stuff you guys do there, how can they get access to that?
Well, we try to help producers and those who work with producers. We try to help them sort through the uncertainty and all of the kind of the chaos of all the information that's out there. And we do that with two things. One is we write content and we share content that we find to be helpful for our thinking. And so we have a weekly newsletter they'll be a part of as a subscriber. The second piece is a unique tool. It's called the Ag Forecast Network, and it helps frame and set up and challenge our thinking about uncertainty. So thinking about gasoline consumption or this acreage question that we have in our mind or yields in 2021, we frame these uncertainties into a decision-making metric where you can write down your expectations, you can learn from others, and you can see how your expectations change. So the combination of the tool and the content we think helps defuse all the chaos that's going on in the uncertainty, all the chaos going on in the decision making that we're facing in light of all the uncertainty and all of the breaking news that's out there.
Well, you can find all of it and get access to AEI Premium, aei.ag. That's the website, aei.ag. Get you access to everything. David Widmar with Agricultural Economic Insights. Appreciate you joining us here on Market Talk once again, and look forward to catching up with you again soon. Thanks so much.
Thanks, Jesse.
David Widmar with AEI Agricultural Economic Insights joining us here today on Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.